Microphone check and screen share check, please. Good evening, guys. Ken at Tortoise Capital, Nightly Strategy Podcast for September 21st, 2022. So today was a Fed day, and so we applied our standard work to it, consisting of Fed wait until the Fed speaks, then watching to see the first reaction, finding the turning point in the RL10. First alert, it crosses the baby dragon. It enters the dragon. It leaves the dragon. It flips the PSAR. We make an entry. We use a standard risk box to the PSAR bottom. It breaks out above resistance. I take a 1-2 exit. It rolls over. It crosses the baby dragon. It enters the dragon. It leaves the dragon. It hits the PSAR. I go short. I put a standard risk box on the PSAR peak. It moves down close to the end of the day with 10 minutes left. It starts to recover. I exit. I make 1R. I make 2R. I make a total of 3R with standard Fed work. My brother says, hold my beer, and he's going to show us a 60R day with standard work. 6-0. That's just showing off. But we'll look at it. So here's the market 350. The collapse continues today. We're down to 377. We're now in the middle of this support level over here. Next target to the downside is at 370, which is a psychological key price level, and then 360, which is the bottom level of the RL10 reversal, and we have just begun to see panic hit as the Fed raised 0.75 and said they can't feel your pain, and if they could, they wouldn't care. Because they don't have to. Here's the zoom in on the RL, on the 30 period look back. Let me get my little pen going here. I commented on this with my master's class last night. I'm doing corporate finance, and they were asking, how does the stock market work? How do you answer that one? I don't know. So we're giving them a try. Let's see. Here's the breakdown. There's 377. Here's the belly, here's the peak, here's the dragon break right there. And here's where it broke below the low of the day at 381, so there was at least that one. And look out below. Those are the two support levels, and if it breaks below the 150-day low, yikes. Here's the 30-minute charts. So we're doing a 10-day look back on that one. So here's the 5-day look, and then here's the 10-day look. And those turning points matter. Here was the break that allowed this move to capture down to 377 on that run. This little piece was just the panic selling in the last 30 minutes. You'll notice that the ETF2 asset allocation model put us in cash 100% last week and has missed and avoided this last 10% sell-off in the broad market. Just saying. Well, looking at the performances now in the sectors, treasuries were up today at 1.68. That was one of the few things above the line. S&P was down here at minus 1.74, so that was a 3.5% difference between treasuries and the broad market. So yesterday was a 0.68 difference. Today was more than that. So let's go down and just take a look at the equity indexes, see how they did today. S&P was in second to last place at minus 1.74. Tech was the worst at 1.79. Diamonds were close at 1.7, so they were all getting slaughtered together. Everybody was selling everything with both hands. Emerging markets 1.67, the Russell minus 1.53. So it didn't matter which equity you were holding, they were within 0.25% of each other in terms of best to worst. Let's take a look at what was really bad today, besides everything. S&P at 1.74. Finance 2%. Oil exploration and materials 2.2. Consumer discretionary 2.37. Ethereum and the FANGs 2.5. Both ARCs 2.7. Simon Property Group, that's the commercial real estate proxy, minus 2.7. Uranium 2.8. Biotech 3.5. Now, individual companies that got murdered, Alcoa 9.5%. Boy, is that in play. Squarespace 3.25. Tesla 2.57. The first time we've seen Tesla get murdered compared relative to the S&P for quite a while. U.S. Steel 2.3, Cliff 1.92. So there's our metals. The metals all got assassinated today. There's Cliff, U.S. Steel, Alcoa. That's our metals. Well, all right, let's take a look at what was better than the S&P. When the S&P is among the worst, that means the big money was hitting sell on the big broad indexes in great big baskets. And that's why everything went down together. Let's see. So we have tech was only 1.56, lumber 1.54, the other lumber 1.5, real estate 1.5, energy 1.47, Aussie dollar 1.25, lithium 1.14. Now a cluster of Brazil, oil, clean energy, agriculture, and blended commodities between 0.9 and 0.6. Staples, 0.38. So that's your defensive play in the S&P. That's a significant defensive play right there. Wheat and precious metals, 0.13. Mexico, 0.11. Above the line, what made money? Bitcoin, 0.17. Marijuana, 0.76. You'd have to be smoking dope to be buying today. And the VIX, 0.24. Now, let's take a look at our semis, because that'll surprise you a little bit. NVIDIA, 0.65. Intel, minus 1.69. Texas Instruments 1.66. So there's our semis. And that should really get your attention right there. As soon as we see the S&P starting to tick up, we should be looking at XLK and the Qs to see if the tech sector is outperforming. And if they are, watch for NVIDIA, because there was some buying in NVIDIA, which has been taken out and slaughtered. That distinction makes a difference for sure. Here's today's sniper trade of the day. Alcoa, 3 minutes. It's been in play all week. Here was yesterday's close. Here was the gap down opening. Here's the OR3, but it had already moved a risk box off the top, so I'm short. And cash at the usual spot, just like I'm supposed to. So that's 1 unit of risk. 1, 2, 3, 4, 5, 6. Re-entry on the collapsing dragon. Plus a half. That's an indication the run is done, and they're waiting for the Fed. There's the Fed bounce. There's the fail. There's the PSAR flip. This is on my mind, so I'm ready for that one. Standard risk on the PSAR flip. 1 plus another 2, so that's about 8.5 in Alcoa. I think my brother pulled 20 out of this one because he was hitting standard additions at every 2R and piling on. So 8.5 or 20, you decide. Standard work. Dashboard 1. Bearish normal. Just a reminder, bearish normal. We've watched this thing move from up here all the way down to here in steadily ordered steps, consistent with what happens in bear normal. And now the long term and everything short term is dramatically oversold. Only the 90-day is barely out of that condition. The risk Z is still saying caution, risk off is indicated, dangerous territory. Winners today in the min paints: Walmart, McDonald's, Tesla, Procter, Johnson & Johnson. The same winners. Same losers: Alcoa, Disney, Cisco. That's the magnitude of the slaughter today. All of these things making multiple new breakdown lows on those different time frames: the 10-day, 1 month, 3 month, and 6 month. Plenty of auto framers to choose from. New 5-day downs here in Microsoft and Visa for another day. Microsoft off another 2.1%. It was a 5DD yesterday. It was one of our targets today. ETFs, the same story. Everything getting assassinated. These are all the globals. Europe getting smashed. I guess when the president of Russia, who's been pushed into a corner with sanctions in a proxy war, says, okay, I'm going to use nukes and I'm not bluffing. Do you believe him? Would that affect the way that you decide to manage risk? I hear him. The Russell real estate and mid caps making breakdowns in the U.S. Boy, just everything getting slaughtered today. Silver, treasuries, Mexico, the only things looking, those were the outperformers today. Auto framer, I'm really just looking at these to pick the ones to be short tomorrow. That's why we're short Alcoa when we get a chance. You could have made the same trades in the other metals. Same difference. I'm watching Microsoft at 3-1. The S&P, diamonds, and tech, all at extraordinary sell-offs. Perfect critical state. 0 squeezes today because of the large range. Godzillas galore, and we're starting to see them enraged. IP was a great trade. We marked that up as a Godzilla the other day. That one paid off nicely today. I'm looking for the ones where Godzilla is enraged on both time frames. I'm looking for the green greens. In our tactical symbol set, both lumbers are at extreme positions. Real estate just getting murdered. Simon Property Group. Now, this is how you read this chart. When it's red on the 5-day, that means the 5-day range is small on this sell-off, and then today's breakdown was large, the first large move out of what had been a consolidation. So Bitcoin and Intel especially. Look at that. Oh, Lord. All of the enraged volatile moves, the green greens. It's a buyer's market. A handful of fence sitters. It's extraordinary to think that Devon Energy in the middle of all this is still in the middle of his trading range on the long term and is abnormally quiet on 5-day and 1-day. So when the plunge protection team hits it, hits the buy orders to try to save this market, watch what happens with Devon and Walmart to the upside. Well, don't watch it. Trade it. That's what I would say. Yeah, Ford. Long term, it's in the bottom third, but short term, 30-day and 10-day, just murdered because of its $1 billion profit warning yesterday. There's your auto framer sniper stats. No surprise, solidly in the winter, with hardly anything else to show except Johnson & Johnson and silver. The multi-time frame NDX really tells you the story. That is bleeding from all orifices with very few differences. Walmart, treasuries, silver, gold. And Brazil, surprisingly, if you're looking for the equity that's resisting the sell-off the most, Brazil. That's the breakdown. It was trying to hold, collapse. When this one collapsed, you get that move. When this one collapsed, you get that move. So, I don't know. We're only at Z-1 on the slope, downward slope of the RL30, so it's just starting to panic, and there's more room for it to go. So another 5 to 8% sell-off would be the least surprising move. So now all of this goodness gone. The river has rolled over and gotten flat while the price has collapsed. And we are at that support level. And if that fails, it's this one, which means that 370 is in play. And if 370 collapses, wow. See you later. Let's see how the team did today. Our intern, Agnieszka. Stay safe in Europe. 1.5 in the DAX on the 1 minute. PSAR flip, long, cash is 1. Get short, gets 0.4. PSAR flip, gets long. Right by the numbers. Right by the numbers, 1.5. And here's just a little bit of chop. Gives back fractions. Just following the rules. Tim reports he just couldn't get, he was late getting onto the trading desk, couldn't get aligned, couldn't get out into his zero state today. Comes out of it smelling like a rose. Those aren't bad. That gets paid. That gets paid. Good scratch. This was the one that he wanted. Yeah. On the re-entry. Couldn't get into the zero state. I would rather be on the outside wishing I was in than on the inside wishing I was out. That's a good result for a day when you weren't feeling aligned. That's some good risk management. I'm glad to see that. You got to know what your zero state is. Very professional. A second one from Agnieszka. Had a little more trouble, I think, on this one on the DAX. Some of those losses contributed to minus 0.9. Net positive for the day. Now my brother. So these were part of the sniper trading course that he's put together. I gave him a list of things that were in critical states, and he took them right off the sniper report there. And this is all before the Fed shenanigans, he's quick to point out. Alcoa, 5-minute charts. The collapse, the 2R add, the 2R add, the 2R add. The further collapse, it starts to recover. So 20 of his 60 today were in Alcoa. All of these other ones were from, except for these two, were on a list of top 10 S&P 500 symbols that had the highest percentage of analysts giving them sell signals. And so he framed those out, found the ones in critical states, followed the price direction, and brought home another 40. Pinnacle West. Breakout, standard entry, 2R standard second position. He's waiting to get another one in. It doesn't materialize, rolls over, out for that one. PSAR collapse, well out of the congestion zone, gets it, stumbles into another 3R for a total of 7.3, because why not? J.M. Smucker, with a name like Smucker, it has to be good. Key phrase on this one: standard work. Z3 compression, dragon breakout, buys it with standard risk, adds the second position at 2R, adds the third position at 4R, adds the fourth position at 6R, rolls over, all out, 12.6 in 47 minutes. Standard work. J.M. Smuckers, acting like a internet bubble stock. It's all hydraulics. Follow the rules. SNA Snap-on Tools, that well-known growth stock, high tech. Z3 pinch breakout on the gap up, one risk box off the bottom, enter second and third positions at +2 and 4R, rolls over, hits the dragon out, gets short one scratch, 9.3 on Snap-on Tools. Woj on Devon. Let's see, where's my drawing tool? Here we go. Gets short one and covers for one. Waits for the Fed. Tesla gets short one, micro loss. Waits for the Fed. No need to be in that one. Well done. Less with the New Zealand dollar. Brings home a professional 1.3 today. PSAR flip covers. This one is slow on the breakout. This one, I think, you should be getting somewhere around in here and then cutting that loss short. Gets paid a little, gets paid more. Good scratch. 1.3 professional. You guys ought to be looking at that, the British pound. They're in a world hurt. And that's what we look like today. Standard work. As my brother would say, you don't even know you're making the money because you're just worried about exits. And having an accountability partner like Ernie to keep you calm and focused and on task, that ain't bad. Good job. Good job, brother of mine.
Hey, I learned from the best. Just I have a
Everything we
video.
got for you today.
I got a video coming out for you
60R.
on the two
Just
hour
saying.
battle drill.
And we'll be ready for him tomorrow.
Yep, loading it up tomorrow. 2 hour battle drill.
Remember, critical state, no directional bias. The plunge protection team has got to do something before the midterm elections. And they're getting ready to gear up and save the economy, which means save the stock market and their investment. So be ready. No directional bias.